Today, the SEC settles with Silvergate over claims the collapsed bank failed to monitor $1 trillion in crypto transactions. Circle gets approval to issue a stablecoin in the EU. And Elliot Chun with Architect Partners breaks down the findings of the advisory's Q2 crypto M&A and financing report. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Bitcoin handing back some of the gains from yesterday as we kicked off the month of July. By noon Eastern, the cryptocurrency had fallen back to the $61,000 level after it popped to $63,000 yesterday. Ether is also lower this morning, but still managed to hold above the $3,400 mark. XRP is in the green, though, inching higher to 48 cents. Okay, let's talk about the top stories. The SEC claims that collapsed crypto-friendly bank Silvergate failed to adequately monitor $1 trillion in crypto transactions. According to a lawsuit filed yesterday, the agency alleges that the firm, along with its former CEO, Alan Lane, former COO Kathleen Freyer, and former CFO Antonio Martino misled investors about the bank's compliance with the Bank Secrecy Act and anti-money laundering rules. The SEC says Silvergate failed to conduct appropriate monitoring of the Silvergate Exchange Network. That's the platform used predominantly by crypto clients to transfer funds. The SEC also claims that Silvergate failed to detect $9 billion in suspicious transactions from FTX. Now, when the regulator announced the lawsuit, it also said that all parties except for Martino have agreed to settle the charges. Silvergate agreed to a $50 million penalty. Lane and Freyer agreed to pay $1 million and $250,000 respectively, along with accepting a 5-year ban on certain executive jobs. Neither Silvergate nor the executives admit or deny the allegations, and a court still has to approve the settlement. Next, Circle says it got the green light to issue a stablecoin in the EU. The crypto firm said yesterday that it's been granted an e-money license from France, which makes the firm compliant with stablecoin provisions under European Union crypto laws. The company says the license makes Circle the first global stablecoin issuer to achieve markets in crypto assets or MiCA compliance. MiCA, which the EU passed last year, is the world's first comprehensive law specifically governing how crypto companies should operate. And turning to politics, the crypto industry's frustration with SEC Chair Gary Gensler's regulatory approach has taken the spotlight this year, and investors have been trying to exert more influence in Washington. Donald Trump, the presumptive Republican presidential nominee, recasted himself as a crypto supporter and pledged that if elected in November, regulators will, quote, get out of the way of innovation. That's according to a person who was in the room when Trump spoke at a Republican political fundraiser at the mansion of venture capitalist David Sachs in San Francisco. As CNBC.com reported yesterday, the perception that Biden is anti-crypto and Trump is pro-crypto has some Biden allies concerned enough to take their case directly to senior White House officials. You can check out that full story over at CNBC.com. Now, this morning, Galaxy CEO Michael Novogratz joined Squawk Box, where he talked politics. He has been a backer of President Biden in the past and said he has donated money to both Democrats and Republicans this term. Novogratz stressed that crypto needs to be bipartisan.
We can't have one party that likes us and the other party that doesn't. And I would tell you that most Democrats, outside of Elizabeth Warren and a small group of people, are pretty pro-innovation and pro-crypto. And so it's been unbelievably frustrating. That said, that's all shifting. And you can listen, no matter who wins the next election, we're going to get positive crypto legislation. I know that.
All right, for our main story, Architect Partners' Q2 crypto M&A and financing report dropped today, which looks at the state of mergers and acquisitions as well as crypto markets in the quarter. So I spoke with Elliot Chun, managing partner at the M&A and financing advisory for crypto companies, to break down the key takeaways and explain why he thinks there's a major inflection point happening for digital assets right now. Today, Architect Partners released its latest quarterly report on crypto M&A and financing, and I want to break down your findings. In the report, you outlined some reasons why we're now beginning a, quote, major growth phase for the crypto industry. Those include that private financings are recovering and that green lights are flashing for crypto mergers and acquisitions. We spoke about the rapidly increasing pace of crypto M&A activity when you were on the show last month, but I want to start off by focusing on this section of your report because it notes that announced transaction value in the second quarter exceeds the combined value from the past 8 quarters at $2.7 billion, a crypto sector record high. What do you attribute this record high to, and do you expect this momentum to continue into Q3 and the rest of 2024?
Yeah, we attribute it to a rapidly improving environment, right? We have a lot of confidence and momentum are coming back to crypto, and there's a few reasons for that. First, we actually call out the first half of 2024 being a major positive inflection point for the crypto industry. We got to zoom out a little bit. We constantly are trying to assess where we are as an industry, and we compared that to the internet in a previous report that we released this year. It's worth noting that we updated the numbers. This is the first time crypto as an industry is outperforming the internet from a value creation perspective. And that's a really big mental hurdle that we are starting to be able to show real data behind. And we're actually recovering faster than the internet did from our respective boom and bust cycles. So to put some numbers behind that, year to date, we added, as an industry, crypto, 750 billion in value created. That's equity plus token market value. Breaking that down, 700 billion about came from token market value appreciation, 400 billion from Bitcoin, 125 from Ethereum, 90 plus billion when you combine BNB, Solana, Tether, and even the Telegram token. That's even coming off of our mid-May highs. So a lot of strength from token market cap. We also had 15 billion in net new capital inflows from the Bitcoin ETFs, 11 billion from crypto public company market value increase, and then finally 6 billion in private capital invested. So really strong numbers across the board, or strong signals, green lights flashing. And to mention the M&A side, when you look at that positivity in the market sentiment changing and some of the hurdles that we've had, particularly from a regulatory and political framework, it's no surprise that you're going to have an increase in M&A activity. And it's been red hot these last 3 to 4 weeks.
Your Q2 report also notes that total crypto and blockchain funding topped $103 billion and that investors are active. The report says that seed and early stage financing make up the majority of both transaction count and capital committed, but that growth stage financing remains muted. Is that a concern to you, and why do you think that is?
So I don't think it's a concern, mostly because the growth stage investments are all still coming out of the recovery that we talked about earlier. The thing that is handicapping a lot of the growth stage right now is that the increased valuations, or the large valuations, I should say, that they had raised at, becomes difficult for new capital to come into growth stage investments. So that's issue number one on growth stage. The second is the growth stage investors looking at crypto as an asset class. They have not been as active as they were in previous cycles. They are starting to come back in. For example, you saw Kotu, which was an important investor in the previous cycle. They're one of the crossover funds. They just invested 150 million into HUT8 as a convertible note. Really, really strong indicator that growth stage investors are coming back. They're just not there yet. And certainly private financings, it's really important to note as an industry, attracted over 100 billion as an industry in private equity capital. That is a lot of, one, that's a lot of capital. Two, that's a lot of investors. And three, that's a lot of return expectation that is in our industry. And as we kind of come from this positive point of inflection, it's exciting to see how the returns of these investors are going to drive both M&A activity and potential public company, regular way IPO aspirations for crypto companies.
Can you take us through some of the investment themes in Q2? One that stood out to me in the report was that investing and trading infrastructure and blockchain and protocol made up more than 33% of all deals and 40% of invested capital, which Architect Partners argues underscores the industry's long-term commitment to building scalable infrastructure. Can you take us through some of the other investment themes?
Yeah, some of the other investment themes is crypto facing dApps, right? One important factor that our industry still needs to solve for is adoption and adoption through ease of use. It's no surprise that we are still building our ability to engage with the 85% of people in this world that aren't currently involved with crypto and digital assets. That starts right up front at how easy is this to be able to work with and to be able to use. And there is a lot of capital that is going into solutions that are improving the way, both from an account abstraction to a user interface to basically taking all the very complex things that need to happen behind the scenes and put them behind the scenes so that up front it becomes very easy to use and there's confidence in who and what you are using.
So, in a nutshell, what do you think is the key takeaway of this report? And is there anything in it that really surprised you?
I mean, no, there's nothing in it that surprised us. This is a moment that we, I think, as an industry have been waiting for. We're going to look back and say, first half of 2024 is when we really transitioned from a recovery mode into a growth mode. That's the biggest takeaway. And we're seeing that because the market participants are very different now. The types of companies and the people in them, all of us are executing at a much higher standard than we were 2 years ago. You have things like professionalism, risk management, ethical behavior, doing it right. Those are table stakes now. And the operators that are building these companies are all have that as their foundational principles.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.